Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. It is Thursday. It's been a long week. Lots of action, lots of things to do, lots of events. And it seems like every day I come in here, we talk about setups, we talk about entries, exits, how to maneuver, and strategies that we try and put forth and then wait for the market to confirm them. If you look real quickly, not much to say about the indices. Let's go here first, the SPX. How did it do? You know, in the afternoon, it looked a little bit as if the 8-day would get breached, and it held once again. I know for me, if you're watching the virtual trading floor, I had a little hedge on, and lately, every time it touches the 8-day, I've been trying to cover it versus press it, and that's been working until, you know, it changes. Is there anything different about today? You know, I'm not so sure. You know, we talked about the red dog reversal here. That was when the momentum switched back to the bulls, especially when it had the power and had day two. Then all of a sudden went to the back, you know, end of the range, and instead of like coming up, going down, coming up, going down, this time we held, showed commitment to it, and then there's the breakout. So this accelerated trend, you know, can be vulnerable if it were to break, and we've seen them break in the past, but at this point it has not. Did we trade below a prior low and, you know, close a little bit below it for the first time in a while? Yeah, but it doesn't mean that, you know, things have fully changed. But when you're hovering above the 8-day in a tight trend, you might want to just be a bit careful because you can break and hit the 21-day. You know, we are many moons above this reversal back here in early February, so you don't have to be all in up there, but it doesn't mean things are screaming short. You know, a few times here, you know, look at the size of this move just to show you, you know, last time we had, you know, the reversal here, the trade above the pivot, kind of like what happened there. You had a quick move, took out the prior highs, same way, you know, held above it and then followed the 8-day all the way up. You had a 2-day move below it, came back above it, and then the next time it came, you know, below it, you had a little bit more of a pullback. So you want to just know when this kind of changes a little bit and gets a little wishy-washy. At this point, hasn't really changed yet. It's just following it and just, again, be a little bit aware. IWM, what did you do? All I know is I was on Twitter. I was out a little bit during mid-lunch, and everyone's talking or telling me, red dog, you know, the IDM is going to break, it's going to break, and, you know, it held it again. So wait for confirmation. Don't just try and press at these times where it's been a lot better to be buying the 8-day than pressing short here. You know, it's one thing to have a hedge on, it's another thing to be just looking for a short because we are up. And again, I know we are well above, excuse me, I have to sneeze, hold on one second. Sorry about that. Live TV. I know we're, you know, above the old highs here, but, you know, you really look at the weekly chart and where are we? Really nowhere. You look at the 2-year channel, which is why I put this in my, my overall thesis, was because at some point we take this out and we can get a nice extension, and we're just right here. So with that said, just be careful just trying to be short and listening to guys on Twitter that all they want to do is short the market because they haven't won. Everyone that says the market's going to collapse, we're going to have a 30 to 50% correction, where the doomsday is going to come, the bulls are going to get theirs. You know what? They've been saying that for years. If you look at the last 100 years, the bulls have won. If you look at the last 30 years, the bulls have won. If you've been investing every single month from, you know, 1997, the devaluation, to the bubble that everyone keeps talking about in the NASDAQ from 5,000, or, you know, unfortunately the World Trade Center scenario in 2001, or even the financial crisis, and you stayed the course, you have a nice average cost and you've been doing real well. And if you use the 8-21-day and you trade actively, you could be long above, and then you trade below it, you get neutral, you get flat, you stay below it, maybe you get short, you look for setups that way, and then you test the 100, the 150-day, and the 200-day. But before you start calling for a damn crash or a correction of 30 to 50%, let the market be sustained lower than the 200-day for more than 4 days. That hasn't happened in a long time. So anyway, came in today looking for setups, and we saw a few of them. First thing first was Apple. Apple has been something I talked about every day, and, you know, we talked about the breakout above 120.51. I know for me, I left for vacation. I was done with it at 124. Everyone was, you know, pressing my buttons, and I wasn't in it for the move from 127 to 133. Tried to be patient. Today was the day that I said it could be exciting. Could we get a red dog reversal? And that's what we had today. Okay, you look at Apple. Let's go to the daily chart. Nice move. Okay, the strategy, or the most recent strategy we talked about was after earnings. Would we gap up after this range, hold above it, and can you buy versus the gap? You could have. Could you have added above 120.51? You could have. This is when I pretty much was done with it besides my call spread. And then it extended away from the 8-day. Talked about not chasing it, that you had a small red dog reversal 133. And then today, you had a really nice setup. Okay, came in today after 2 big down days. You know, we wrote down the pivot point of 128.15, opened up a little bit, traded below it, danced around it, got some people out that were trying it a little early, and then you had a really nice reversal. So you could have lost a little bit of money back and forth in the beginning, but then after 11 o'clock when it traded above 128.15, you could have bought it with the stop at the low of the day, closed at 130.41, made $2 and change, and maybe held a little bit into, you know, what could be another move. You know, tomorrow you have option expiration. Maybe it wants 130, maybe it doesn't. They came out with an invitation for the watch, and we'll see what's next. Overall, though, if you didn't chase this, you had a really nice tactical trade there. If you go to the 5-minute chart to see how you could have, I guess, approached it a little bit differently. You know, I know for me, if you were on the virtual trading floor, this was the first move. Okay, tried to get back above it here, and it failed. Okay, this was at 128. Where's 128.15? Actually, that's right here. It failed. Okay, I tried it. I was long overnight, sold it when it broke, bought some here, added some here, broke below, got out of it, waited. Next move happened into 10:30. Started coming up. I tweeted right here saying I am long some. We got to try it again. And this time it traded above, okay, the 128.15, and I talked about also how it was below this moving average on the 5-minute. This was the first time I got above it. And then you could draw your line like this. You know, besides getting back above it here, that was your secondary buy. Once you bought it here, this time, not like this one, because it was a little later in the day, maybe some mutual funds that start buying at 10 o'clock, start buying then, not enough power in the morning. That was your trade. Came back, held higher, gave you a trade all the way back to, what did it do? Back to old resistance. That was your selling point. Came in, held 129, came back up. Nice trading day in Apple. So for those of you that follow me on Twitter, just make sure between 8:30 and 9 o'clock you look to see what charts I put up there. I put up a chart of the S&P every single day to give you pivots so you could figure out how to make adjustments around it. Every now and then I put charts up that I think are compelling, especially ones that are on my go-to list. Other ones that I put up there were LinkedIn and Facebook. Little wishy-washy today, but you know, we've been in these things for a while now. Facebook, I would have liked to see a stronger close, but you know what? It didn't happen. Here was that first buy above 77. Nice little commitment to it. Then it traded above this 50-40, and we do use tiers. So when it went above 50-40, I was a buyer, a little bit more. Above 51, I do a little tweet saying I'm going to reduce a little bit here. If you were in yesterday, added here, you reduce a little bit so you can be comfortable and go back to what you had. And it basically, you know, closed decent. Maybe it wants to use 80 as a strike because it's been dancing around it for so long, and there could be a lot of puts and calls. But ultimately, I still think that, you know, it could see a move above this 82, and we'll see what happens, you know, next week. At this point, nice trade here, decent trade yesterday. Remember we talked about closing above 79.50, take it home with a little bit more. It did so. Then you had an add here. You just have to sell some strength also, and then stay with it. I'm still in the options also. Some people turned it into a call spread. If you bought it in here, and then at 81-ish, if you sold the 82s or 83s, you're playing next week for a breakout for free, basically. So we'll see what happens. LinkedIn, which I do not choose to play because it is loose and wide, probably a little frustrating for people who weren't long it from this potential day one yesterday. And if you added today for a breakout, didn't have the power, and it is what it is. You know, it's a hard stock to trade. It's right near high. It's the high valuation. That's why I'm not so active. I list it there because people make money with it. Most guys that made money today had it yesterday long because it showed relative strength, perked up to the upper end of the range, and you got to be careful here because it hit 276. So you could have bought it above 272. You could have tried it above 274, but then once it broke above, came back below. you had to get out of some because momentum levels are only good if momentum levels held. Twitter gave you a nice trade today also. It didn't close on highs. Okay, it's been a nice mover. It's not a blockbuster, but you know what? You got to give it some credit. It was on my list as the #1 internet stock for 2015, or social media, I'm sorry. And this is when we got in options, sold some, got back into stock, and let the 8-day catch up, and hasn't had much power. But you know, options expiration tomorrow, who knows? Maybe they want to strike it at 50 also, where they spent a lot of time around this 49-ish, and then we'll see what happens next week. But overall, nice situation. Banks, a little weird. I came in long Morgan. They announced a settlement, and it was out of play. I don't know if they forget about it. I got stopped out of it, so if you were in it with me, I apologize. Did not break above 37. Still hanging around, but this, unfortunately, I was playing a laggard. The ones that are acting better, JP Morgan, acting better, cleared this area, closed on highs. Goldman Sachs, acting better, following the 8-day strong. The two bad ones right now are Bank of America and Morgan. So I don't know why Bank of America did this today. I wasn't in it. It is what it is. You know, we talked about the lower pivot in the TLTs. Trade versus 166, add through 128.20, and then, you know, resistance to 130.50 to 130, you know, one, and said is a better sell than buy because it had a lot to prove. Yes, it was a good tactical trade because it broke the accelerated trend to 136, so why not try to 128? Doesn't mean it's a new trend. At this point, you know, I posted this a few times, and here's your out. Then you had this lower pivot, gave you a nice trade through here, little follow through yesterday, and now this, you know, a little bit engulfing into resistance. So at this point, see maybe if it holds around here to put a low and a higher low, but at this point, just keep trading it. It's a lot of action there. GLDs had that reversal a few days ago. Same thing, like on day 3 of a broken trend below all the moving averages, I don't want to see you chase day 3, you probably sell it. And if you tactically bought it on this reversal right here, yeah, you know, you made a little bit of money. And now at this point, it's just a choppy mess, probably in a void. One stock I did screw up was Google. You know, I was in it before vacation and had a nice move, and then it looked a little wishy-washy when the insider said they were selling it, and never got back to it. And, you know, here you are with a nice breakout above the 200-day. So seems as if the complexion here has changed. This was my trade right here. When it broke above this 540, gave you a nice trade, and then it broke down. I was like, oh, I had a great sell, and now look, boom. So, you know, at least it's back on the map, and maybe it'll continue to act a little bit better moving forward. Blackberry, also not so bad. Bought the options a few days ago. Here, on this day when it perked up, thinking maybe late day rally, they come up with something out there, and all of a sudden they talked about a deal with Google. And you know, I'm still in the options. I'm still in some small stock. It's, you know, it might need a little bit more to break through this end of the range, but I do think that people have left this for dead. There's a big short interest, and maybe with all these deals, I know people would rather have a takeover, but maybe that's not in the cards. But a few different deals with a secure software platform that they do have could give you that move, which looks like from 7 to 11, could give you up to 14 at some point. So if you don't like the way it trades, you know, buy some $10 calls 6 months out or something like that, whatever you want to do. But does seem like there's been a lot of money put to work here in this lower end of the range, and at some point, if I guess something maybe even a little bit more exciting than a deal with Google, it could be in fuego. We shall see. Oil traded off today. Definitely still wishy-washy. Not the place to be overly focusing on. Gave you a little reversal yesterday. So some people who went out long, if you went out long, you know, it made some sense, right? Reversed in the lower end of the range of this channel. Then today, opened down, pushed below, came back above. It's just a choppy mess. I wouldn't be overly trading oil. Oil, you know, the moves aren't so big, and it's a little random, and there's just so many components that why do things that don't make sense? And oil right now is still in limbo. The XLE actually had a weaker day. Talked about this level, saying if you were long, you know, at this little red dog reversal here, and you were trailing it, you have a little bit of a trend here that if it were to break below this, you know, this 79, just be a bit careful, and it did break below it. So if I were still in this, I'd probably be out and wait, because it's still below every moving average. It still has a lot to prove. I don't care what some of those, you know, guys on TV say. You know, I'm going to wait. You know, we had a nice reversal here, broke, decent reversal here, still, you know, not looking so unbelievable. And that's really it. You know, there are different stages of a rally. There are different spots where you could be heavier and lighter. There are different spots where you could be in a tier 3 or just nickel and diming. There are spots where you don't want to be short and spots where you want to have maybe two-way action. At this point, after a move from 1990 to 2100 and change, we're still hovering above the 8-day. The market does feel a little more vulnerable where if you're short, they let you out. And if you're long, you have to be in the right spots. Had some nice specific trade today in Apple. Hopefully you caught it. Facebook's been good. Twitter's been good. If you were in Google still, congrats. The solars have been decent. FSLR back in play. A lot of guys had a nice little option play there with me into this little spot. Looked good, and then all of a sudden you got that lucky gap and still open there and still looks good. So FSLR isn't on the go-to list. FireEye still hanging around. Okay, big channel broke above it. Not a lot of power today, but still something worth watching. Talked about this little Zyup the other day. Look at that move, boom. Okay, a little pharma stock tweeted it, said above 1020, you can go and look at it now. So I think there's a lot more things to do if you're looking for long side opportunities versus just ranting and raving about centrally planned markets, about the Fed, about low volume, about things that are out of your control. Do what's in your control. Use your keyboard, develop a system, move and groove through the market, know your time frame, and I think you'll have a little bit more success versus thinking the world's going to end tomorrow, because if it does, you have bigger problems than the stock market going down. Navigate these things. Don't obsess about them. Have a great night.